All right. Well, good morning, everybody. Thank you for joining us this morning to talk about the Indiana Black-Owned Business Loan Fund. Before we get to the meat of the program today, I want to do a couple introductions and welcome. So first off, welcome. Happy Monday. I know it's raining and very, very cold up here today, but at least it's not crazy snow. So I'm glad to have all of you here. My name is Sam Centellas. I'm the Executive Director of CDFI Friendly South Bend. And why is my slide not moving? And there we go. And I'm glad to have you guys here. So I'm going to do a couple quick announcements. One, we're recording this webinar. So if you're like in witness protection or something, be careful what questions you ask. But it will be posted later so you could share with others that maybe weren't able to join us today. So CDFI Friendly is a new organization here in South Bend. We've just been around a couple years. We're glad to be joined. I'll introduce Ann and Laura here in a second, but we'll jump on that here in a minute. But first, just a couple quick overview. CDFIs are community development financial institutions. I boil it down to just quick intro that they're kind of nonprofit loan funds designed to impact the community. And today we've got a great CDFI Bankable that's joining us. So our work is to try to connect local potential borrowers to flexible financial capital that can assist their business. So we're going to be recording it. That's happening. Looking at my checklist here, I always like to make a quick Spanish introduction at the beginning of all of our programs. And so I'll do that now. So el programa hoy día va a ser en inglés, pero si necesitan ayuda en español, por favor, no pueden llamar a CDFI Friendly. Tenemos seminarios en español en el sitio de web de nosotros y podemos ayudar en español también. So with that, I will jump into doing our first introduction. I just like to let everybody know that we have Spanish resources on our website in case Spanish speakers joined us today. And I also know TCU and Bankable both do a great job of having bilingual materials as well. Thank you. All right, so first I'm going to introduce Ann. Ann got a major award last week, and so I want to congratulate her on that. It was fantastic. TCU, Ann and TCU have been great partners in the work of CDFI Friendly and many other impactful organizations in our community. And so we want to thank them for the sponsorship for CDFI Friendly, their partnership with Bankable, and to give Ann a few minutes to say something on behalf of TCU.
Well, good morning, everyone. Sam, thank you so much for that lovely introduction. I am so happy that we are able to partner with Bankable and with CDFI Friendly South Bend today. We are partners with both institutions, and we are well aware that sometimes companies need services that might be outside of mainstream banking. So organizationally, we want to make sure that our members and people within our communities simply have the resources available that they will need in order to have a successful business. So this is the first time we've actually done a joint webinar with Bankable and CDFI Friendly South Bend. We certainly hope you enjoy the information that will be provided today. And definitely want to open up any resources to you either during the meeting or after the meeting. So thanks very much for being here. Excellent.
Thank you. Thank you very much, Ann. All right. And next up, I will get to, Laura, I've had a fantastic, Laura, we've been working together a little over a year now, and I'm still new in this role. We've just been here a couple years and had a great relationship with Bankable. So they're a CDFI headquartered here in Indiana. And so proud to have a Hoosier serving CDFI in our corner and having a great innovative program like the Indiana Black-Owned Business Loan Fund. And so I'll introduce Laura and kind of let you take it over. I'll run slides for you. Here's her contact information. For those of you that have heard me promoting the webinar, I've had some of her business cards and other things from Bankable to connect with folks. Laura has been a fantastic partner in this work, and I will let her take it over.
Thank you, Sam. Thanks, everybody, for joining us today. Like Sam said, we are a CDFI. We do that mission lending, and we have found amazing partnerships with both CDFI Friendly and Teachers Credit Union. So I'm excited to be here today and talk about what we do and what we can offer to be a resource to small business owners. So you can go to the next slide. So who are we? We are a nonprofit that does small business lending. And I think that that is an important note when it comes to being a lender of loans. We're not in it to make boku bucks, but we do want to be that resource. We are a mission lender, so we are able to have some programming like the Indiana Black-Owned Business Loan Program that helps target some specific gaps of accessing capital. We are that safe second look when small businesses are not eligible with traditional financing. And so if you're going to your bank and you're a startup and they need to see 3 years tax returns before they can do anything, we are a good second look for that. We want to kind of interrupt that cycle of folks finding that lending through predatory loans. We don't want that to happen. So we want to be that safe second look. When we like to call ourselves problem solvers, we're going to try to make the loans work where we can. We can be a little bit more flexible and creative in our underwriting, and we're going to treat you like a human being. So we're going to look at your specific situation and see where we can make things work where we can, if we can, and keep that relationship open, even if it's not the time yet for that lending. We always want to give you some constructive feedback and see if we can get you back later on. And we're non-depository, so that's a big way that we partner with banks all across Indiana, is we just take care of that lending piece of things. We don't take any depository things. So again, we can be creative and flexible in that underwriting. We are working with businesses that maybe are not ready for that bank financing. So we want to create a network of support too within our lending. And we're trying to make it as fast as possible. We know that, there's a lot of need out there. And so we're going to try to make our services as accessible as possible. We can go to the next slide. So here is some statistics about the Indiana Black-Owned Business Loan Fund specifically, and I'll go on later to talk about our other loan programs that we offer. But this is a little over a year old now, this specific loan fund. And it has been really cool to see the impact that this has had in just its first year. We were able to lend over $1 million to Black-owned business owners, 75 loans closed. 40 of those were women-owned businesses and 41 of those were startups. And so you can kind of see in the map where those were made. And so this year we're hitting this even harder. And so we're excited to see how this is going to grow even more as it continues. So looking at who is eligible, you must be for profit. Unfortunately, we cannot lend to nonprofits. We can't do like flipping or, investment real estate, that kind of stuff, house flipping. If you are buying property, your business needs to occupy 51% of that square footage. Can't do multi-level marketing companies. We do want you to have at least a conversation with your bank and, at least establish that relationship. If you know that they can't lend to you, you can kind of get that soft denial. They don't necessarily have to take a hard pull on your credit and go through the whole process just to be declined if you know you're not going to get that financing. But we do want you to have at least one conversation, because if you can get that funding from your bank, that's going to be better for your business. Get the best rates. Can't work with someone if they currently have pending litigation. That includes civil suits, bankruptcy, or divorce. But if that has been closed, we can then take a look at it after we get that documentation. And then I'll go into the details of the loan products here. So we have our microloan. That is anything below $50,000, and that can be terms up to 6 years. Typically, we see 1 to 4 years. That rate is fixed at 8.5%. And we can do equipment, working capital, inventory. I would say our microloans are our bread and butter. That's typically what we're seeing small business owners need to kind of get up and going. And then we can go above that in our Community Advantage Loan Program. And so that is anything above that 50,000, and we can go up to 250,000 for startups, and then we can go up to that 350,000 if you're 1 year in business at least. Terms up to 20 years, but typically we're seeing like 6 to 10 years on that. The interest rate is variable. It's prime plus 4. So right now that is sitting at about 11.5% right now, unfortunately with those prime increases, but that can always change. And then same usage of funds, but we can do some of that real estate purchasing, with this fund. And if you go to the next one, we will have some specific information on the Indiana Black-owned business loan fund. So this operates just like our microloan. It's anything below $50,000, and this is the one we're kind of highlighting today. Terms, between 1 to 5 years. It is fixed at 8.5%, and there's a couple extra perks with this one. There is no closing cost fees, which are typically 3% of the loan. There is no credit score minimum. So we'll still run your credit and kind of take it into account, but there is no minimum. And then we will also help pay to get you into a Chamber of Commerce or help pay for MBE certification of your choice if you were to be interested in that. So it kind of goes beyond that lending piece of things. And then we have our credit builder loan, which we can do alongside other loans or we can do on its own. This is typically for somebody's who has a credit score between that 500 and 650 range. And it's just a loan of $500, not really going to move the needle for a business, but it will help to be eligible for lending in the future. And so you get that paid back over the course of a year. We report that and you get access to our credit counselor on staff who will sit down and look at your specific situation happening with your credit and be able to kind of look at some strategies on how to improve that. So on any of our loans, none of them have prepayment penalties. So that is another really important note. So if you want to get it paid back as fast as you'd like, or if you at some point can get refinanced with your bank for a better rate, we would encourage that, whatever, gives you the best for your business. So a lot of times if we're working with startups and they get a couple tax returns under their belt, with our initial funding, then we can have them get refinanced for a better rate. You can go to the next slide. So another part of us as at Bankable is, we want to help in your growth as a business to then be able to be eligible for traditional financing. So we have programming once you get a loan with us, once you're approved, where we can have some strategical ways to help you grow. So that can be help with business support. We've got a business coach on staff. She does a lot of help with getting people set up with QuickBooks, trained on QuickBooks, and be able to get them kind of just even separating personal and business finances. We can do that credit counseling. Sometimes, we have grant money available to do some basic website designs, maybe some pictures done for your business, that kind of thing, if that's what you're needing to. Go to the next slide. So looking at what you might need if you're interested in a loan with us, you're always welcome to reach out to me, or if you reach out to Sam, Ann, or Lindsay, they can all get you connected to me as well. And we'll kind of talk about, your specific business. I'll go over, some of the eligibility, and we'll talk about these documents that you need. So if you're a new business, if you're a startup, we'll need 3 years personal tax returns, your business plan, financial projections, and then, like a photo ID and credit release form. If you're an existing business, we still need those 3 years personal tax returns. We'd like to see whatever business tax returns you have up to 3 years. If you only have 1 or 2, that's fine too. We want to see your current balance sheet, your profit and loss, year to date and previous year, and photo ID and credit release. So we do have some templates available for business plan, financial projections, and profit and loss. They're very generic. So if you have your own, that's totally fine. But if you, have been in business for a couple of years and you know how you're running your business and you haven't necessarily written anything down, you're welcome to get in contact with me and I can send those templates to you as well. or there's tons of resources out there. Even if you do a quick Google search that can get you what you need for that too. Go to the next slide. So looking at some, success stories, some people that we've worked with in the past, Be Free Bakery, they are gluten-free, dairy-free granola. And I believe that they hire and employ those who are on the autism spectrum. And they started in farmers markets. We made a $50,000 microloan for inventory for their first Kroger order. And since then, they've grown to all 50 states. And I believe now they are also in Costco. So very cool. We've also done some great work with Barton's Discounts. They started in a storage unit. We did just a $5,000 microloan. Again, those microloans are typically what we see, kind of that bread and butter, to buy their first truckload. And now they are in a 100,000 square foot facility where they can fill that space with their product and be able to sell that. So, and they're paid off and bankable. So it's cool to see that, we can have some pretty big impact on the small business community here in Indiana. Like, we are a Hoosier, business. We started in Anderson, and we have started really small, and we've just grown and grown from there. And it's been really exciting to see the kind of impact that we can have and continue to have with great partners like CDFI Friendly and TCU. So if you guys ever have any questions or, want to get in contact, or if you're in front of small businesses and want my information to be a referral source as well, you are welcome to get in contact with me. My information was at the beginning. It might be at the end as well.
It will be at the end again. So I want to make sure see if people are able to ask questions or not. And I sent you a text. I don't know if you're able to mess with settings. I can't while I'm screen sharing. But Alora, thank you very much for that. We're going to jump into questions here in a second. If I want to make sure people can ask them. I know, Stephanie, you put a hand up and somebody sent me a comment. They didn't think they could chat. We also have a question and answer that is working. So it says chat is disabled. Okay, so somebody posted that. All right, so we'll take a look at that in a second. I will give a quick, just kind of other overview of some other ones we were going to cover while we see if we can either fix that, or you could use the question and answer, because that is working, and you could put your questions there, and then we'll answer them out loud here. But the other service, and it's great, I didn't know about this when I jumped into the CDFI industry, is how many resources CDFIs provide to small business. So Alora mentioned, providing templates for business plan, and other coaching, credit services. So other things that also can help support you as a business owner in running your business. And so that's a great piece that CDFIs really put a lot of focus in, that it's not just about the lending, that it's about other services. The other one that I like to talk about is the bevy of partnerships that we've created in the community here with other organizations that support. And many of you on this group, I've actually met you because of some of these groups, whether that's Spark, or I know Hustle SBE is currently taking applications right now for their next class. So there's some great other resources here in the community. So I'll give you the process. When somebody reaches out to CDFI Friendly and says, hey, I'm a business owner, I need help, right? My first thing right away is to try to do kind of that list that Alora had earlier of here's the requirements. I ask, where are you on this list? And then the things that you're missing, I'll say, who would be great to help you with that is this, or and that depends on, do you want virtual coaching or face-to-face coaching? If you want face-to-face, I'd say, well, then let's try this place because they're doing that. Or if you want a program or class or a cohort, check out this program. So that's part of what we try to do at CDFI Friendly. Our focus is working on capital-ready businesses to help them get financed. But if you're not capital ready yet, we will help you get to the resources that can and help you do that structure. So, all right, we have our first question. I don't know if our panelists can see those and who wants to grab them.
So I'm going to read it just in case others are having some difficulty. The question is, can someone start with a micro loan, pay it off, and still get the larger community loan later on? Do you provide multiple loans to one business? So Laura, that is probably for you.
Yeah, we can absolutely do more than one loan. You're welcome to start with a micro loan. In fact, I kind of suggest that to a lot of people especially who are right on that bubble. because there's such a difference in interest rate. And so if they want to start with that microloan and stay at that fixed, at 8.5% and then get that paid off and then borrow more later, you're always welcome to do that. And we often have, folks who get one loan with us and then, they come back for more. We're going to check to make sure. And, if you've already done a loan with us and if you're at any point, quote unquote bankable, we'll probably say, hey, why don't you go check with your bank and see if they can do anything now. But yes, we love when people come back.
And the other one Alora mentioned, for Bankable, they have no prepayment penalties either. So part of it would be, doing one loan, smaller amount. And then if you go for a larger loan, right, you're just paying off the first loan. And part of what any CDFI is trying to do is help move the individual or business owner back to their bank or their credit union. And so, right, so part of it would be if and when, right, credit scores improved or business has changed, or you're buying a building, doing something larger, you're able to roll that all in. And the goal is to try to help you get to, a better rate, better term, something that helps and supports your business growth.
So we don't have any other questions in the queue right now. Again, since we're having problems with chat, if you do want to go into the Q&A, which is at the bottom of your screen, please go ahead and put your questions in there. I also want to introduce Lindsay Wirtz. Lindsay is actually with Teachers Credit Union. She's been quietly on here as a panelist, monitoring questions and those individuals who are in the queue. Lindsay works out of the Indianapolis office. I work out of the South Bend office, and she's been absolutely great helping us through this today. And again, we are both more than happy to get you the resources you need, either through Sam or through Laura. Okay, Raphael has a question, and that is, can you help with the business structure and owning commercial property for the business? Sam, do you maybe want to?
Laura, if you want to handle a little bit that first, then I can handle more of it.
Absolutely. So I'll kind of talk about owning commercial property for the business. If you wanted a loan to kind of get that, your business would have to, occupy that building. And so if it's just like an investment for commercial property under your business name, we couldn't necessarily do that. But if you, needed to move into a bigger space or that kind of thing, we can, do that. Helping with business structure, maybe that's Sam, that kind of goes maybe into that business support.
Yeah, and so Raphael, we met just last week, so it's great. I'm glad you were able to make the webinar today, so it's good timing. So definitely, I think it's along the types of services that we help connect small businesses to. So saying, okay, so you're looking to purchase a building, and part of that, I always tell everybody, is that when you're thinking about that, start all these processes early, so that way, one, you're in the queue to think about, what is your capacity to borrow to be able to purchase, so that way you can have that in your mind before, like, oh, great building just went on sale and I got to try to buy it tomorrow. And it's like, well, now right, so let's get the pieces in place early is one of the things, whether that's buying a semi truck, a building, or even a large piece of equipment for your business, right? Getting the financing lined up in advance, so when a great deal pops up, you're able to take advantage is important. On the structure piece, that's where knowing where you are or where the business is, we could connect you and say, okay, you want to talk to this business support office, or let's connect you to this service that the city is offering to help structure that, or, a program with the Latin American Chamber or some other group. I had that slide up earlier of the great list of organizations here locally. Another great one is the Indiana Small Business Development Center that's housed at IUSB. They tend to help a little bit more with some of that legal structure. So since we've been connected now, I'd love to chat and we could talk about how we connect you to what that looks like. And so we've got so I think, Raphael, I covered a little bit of that. We're connected by email. Shoot me follow-ups and let's chat about getting you the resources on the structuring side and that. And then we can definitely look at, right, some great lending opportunities to help you grow. So next question is from Eric from the city. This seems like a great program. Okay, so Eric, you're, in terms of referrals, yeah. So Eric asked a question here from the city in terms of directing how you would direct people. One, now that folks are connected to Bankable, we don't necessarily want to be in the way. So people could connect directly with Bankable. TCU refers to Bankable. I like people to kind of connect with us for two reasons. So I can help if there's some things before you're ready for lending, or understanding maybe some local resources that we can get you prior to thinking about that loan application. We try to do that. But most definitely, getting people here to CDFI Friendly, and then we can help. We use our term, we're like a matchmaker, so we can then connect somebody to the best resources that they need. And I'll read these aloud because I'm not sure if other people can read them. And then Laura, this one's for you. Question, I purchased my salon 1 year ago. I currently have that loan and another SBA loan. Would I be able to consolidate and get a bit more for salon equipment? And what does that look like?
Yes, we can definitely look at, refinancing debt. We can look at getting that working capital or equipment, alongside of that. We would just take a look at, what your existing loan situation is like. And, if our interest rates are going to be lower than what you're paying, or if it's going to be higher, we'll kind of see what's best for you in that situation. Hopefully that answers your question.
And then all of these questions, some of them are going to be more detailed, their responses. So kind of like my earlier one to Raphael, right? So some of these will require obviously some follow-up for us to chat. So please, if you have the RSVP link, you can reach out to me, and then we can get the further conversations down the road to look at. It all depends on numbers. And so it's really hard to give advice, via a webinar with few details, but we'd love to follow up and get more information. So the next one, I'll read this aloud, and whether Bankable or TCU wants to answer, and then I can put a little bit at the end of it as well. How does Bankable and TCU arrive at the loan criteria and parameters for loans? What's the gap you've identified? Does the underwriting process include voices of potential borrowers? And what considerations are right-sized for returning citizens?
So I'll go ahead and kick that off. Thanks so much for the question, Ivan. So the loan criteria is pretty well set with the commercial lenders. We also do a lot of SBA lending, and the government sets the parameters for those SBA loans. On our end, and really on any bank's end that is referring to Bankable and to CDFI Friendly South Bend, the underwriting criteria is actually somewhat unique based on the situation. So we take a look at collateral, we take a look at capacity to repay, we take a look at overall credit. The largest gap, and Sam and I have had a lot of these conversations, we have several gaps. The first is coming into the program and setting up your business. That is a big gap. We want to make sure that your business is set up correctly and that you have the legal structure in place before you begin taking on additional debt. That is very important. And that is something that a financial institution just does not have the capacity to help with. So that is one of those gaps. The other gap is in terms of overall reporting structure and how to get financials in place. Sam and through CDFI Friendly South Bend, and also Bankable through Alora, do a phenomenal job in terms of hand-holding in order to assist filling out a profit and loss statement, in order to set up basic documents that a financial institution is going to look for. That is a big gap. Lindsay and I are the first to tell you that commercial lending in any financial institution tends to be incredibly structured. So in order even to get in, we're going to ask for several documents. Profit and loss would be one of those statements. What are your current financials? That's something else we're looking for. If you don't know how to put that together, that automatically means that you are not eligible for basic standardized funding. So we do reach out to Sam and to Alora just to ensure that you have that extra handholding to complete those forms, to understand what is required to get in that lending game. And that is a huge gap for us too. In terms of feedback from people who we are lending to, we always look for feedback. We always want to have an opportunity to make things easier. One of the reasons why we partner with CDFI Friendly South Bend and with Bankable is because we did identify that gap. And we heard what was happening, and we wanted to ensure that we had partners who were better able to assist with the documentation than what we would be as a financial institution. So I hope that answers your question on our end. Or did you want to pick up from your end?
Yes, those are all phenomenal responses. And a lot of that I would, say ditto too. A lot of our loan criteria does come from the SBA. A lot of those same gaps that we can kind of help fill when folks have a lower credit score, we can do some of that lending. We know that there's a lot of systemic reasons that lead people to have lower credit scores, not as much access to co-signers or collateral. And so we want to be a space where, we can be more creative with that, a little bit more lenient, where we can take a look and give people chances and say, we're going to believe in you and we're going to believe in your business and try to help you get there. And so those are big things that, we try to be champions for our clients. And one of your questions I really liked, does the underwriting process include voices of potential borrowers? And that's so important, right? So some of our loans do even get approved through committee. And so we're not just having one person take a look at this. We're a team, we're a small but mighty team. But everybody's kind of involved in that. And then we take it to a committee of experienced bankers, people who kind of know what they're talking about too, and are able to kind of see where we can make things work. And so we have a lot of eyes on it. We purposefully make some risky loans too, because we want to give people those chances.
And Ivan, I see your follow-up question, and I'll answer kind of in general how I see it. And when I talk about, I don't know if we discussed this before, but when I talk about small business lending or lending in general, I use a soundboard analogy, where it has all those little sliders on it, like a soundboard mixer. And when, banks and credit unions and CDFIs as well, they all have kind of where they would like those sliders all to be, whether that's your credit score, your income, right, profit from the business, debt, all those other different sliders. Banks and credit unions, because of scale, tend to be pretty rigid on where those all need to be. CDFIs then will be more flexible. So they'll often look at, okay, well, credit score is low, but the business is doing really well. So we'll take those two things into account and let one balance the other as a way to be a little bit alternative. Some of the CDFIs, I don't know, Laura, if Bankable does this a little bit, we'll actually dive into the credit score a little bit and not just take the number and say, well, it's this number and that's that. They'll dive in and take a look and say, well, what are some of the factors that have caused that? I hear stories all the time about people who had their credit score ruined, right, because of a $30 bill that they let sit for years. And it's just like, well, that's different than, being 1/3 of your income in annual income in credit card debt. Right, that's a very different kind of change to your what's impacted your credit. So thinking about some of those things also play into and doing some of the alternative criteria, like looking at, if people pay their rent on time every month, which is not something that's reported to your credit. More and more financial institutions are actually taking those things into account as a way to help somebody do an alternative credit score is oftentimes what some of the places call it, or how they kind of will balance those out. The other one, to your earlier question that I wanted to comment on, was looking at the gaps. So CDFI Friendly is new, right? We've barely been around a couple of years, launched during pandemic. And so we're still adjusting the things that we want to try to do as some overall organizational goals. But one of those is helping identify gaps in finance and then seeing how we can help fill those. And one of the big ones we're working on, and I use my slider analogy, is around home buying and real estate in low income neighborhoods in South Bend, especially like LaSalle, Kennedy, the NNN, where the appraisal gap is causing a reason why people aren't able to borrow to either purchase a home or to purchase one to turn it into an affordable housing rental and become a landlord and build wealth for their family. And so we're looking at, so if all other things on the slider are good except the appraisal, how do we help fill that gap? And so we are in our infant stage here, identifying those. And then for us, I'll nerd out on my engineering side for a minute. For us, then it's looking at process and looking at quantity, right? So it's hard to come up with a program if there's going to be 2 borrowers in the community that need this. And to get that through committee versus if there's 400 of these that we could do in the community, if that's a need, that's a process, let's put that together and let's find a way to fill those gaps. So we're doing a little bit of all of those things and slowly just trying to find flexible options to help potential borrowers. So unless there's anything else to add there, and then Ivan, we definitely got to follow up again. I always love our conversations. And anybody else, I haven't seen other hands up. We're not quite at time yet, but I want to make sure if people have a chance to ask a question. If not, you definitely have our contact information. I've left it here on the screen. You can reach out to either of the 3 of us for this. You'll get a message from me post the webinar today, thanking you for being here, which then you can easily reply to get some support. So we'll give a couple more seconds or final words from other speakers before. Maybe I'll give.
I did actually want to respond to Ivan before we get into Consuela's question, and that is we actually are looking at alternative criteria beyond credit score, but we're doing that more so on the consumer side than we are on the business side. The business side, again, as Sam indicated, tends to be much more rigid. Simply because of the guidelines that are already set, especially through SBA. However, on the consumer side or the retail side, it is definitely something that we are taking a look at right now. And we have launched a few pilot projects for us to take a look at that. So Ivan, great question. I do see the tide slowly turning on alternatives to basic credit criteria. And CM is correct that we're now taking a look at other bills, utility bills. We're taking a look at rental payments, things like that, that don't necessarily report on your credit bureau. So Consuela has a question. I'll build 400 houses if it gets a program for funding. That is great. Sam, I'm sure will follow up with you later on that.
Yeah, and the other one before we jump off, based on Ann's answer to the previous question as well, right? So thinking about alternative credit score and also just other items that might be challenging for finding and or closing a loan, is the whole conversation on if you ever get denied for a loan, you should ask the financial institution, whether that's a CDFI, bank, credit union, whoever, why. They should tell you. If they don't, call me and I'll call them and help out. But then ask them, what would it take? Right. So I think it's really important. I always tell people, I do this a lot when I'm working with real estate people, and that's what Consuela's question made me think of, is find out what that financial institution is hungry for. They do loans like this. We want criteria like this. So then you've got to figure out, how do I get my business like that or close, or this isn't a place, right? They don't do the type of lending I need. So I need to go somewhere else. And different financial institutions, some are better at commercial, some are better at real estate, some are better at small business. The same thing with CDFIs, whereas Bankable is a great partner for us for certain types of lending of certain size or criteria. I might say, I have another CDFI that I think might be better at this, or I'll refer both, for you to give you some options. So thinking about what all those different options could be for you. Barbara, I saw your hand go up. We're not able to do, the chat's not working, but the Q&A is. So if you're able to drop something in the Q&A, it's a little tab next to the chat function. It says Q&A. You can drop a question in there. And then the other one with Consuela, it is like, that's a challenge working. And we know with the formerly redlined areas of town, because of the appraisal gap issue, it's extremely hard to get a loan to do work in the community, because the value of the asset is not going to be worth the expense that it takes to get it done.
Yeah, I also want to add to the previous question when you were talking about if you were denied. If you are denied, please make sure you get a copy of your credit report. You do want to make sure that the information on your credit report is accurate. We also at TCU have certified credit counselors. So those counselors are actually available to sit down with you to review your credit report. to explain how to address any inaccuracies. And if everything is accurate, really explain to you how we can kind of get back on track. What you need to remember, and I've been in this business a very, very long time, and that is your credit didn't actually change overnight. It took years. And so just as it didn't change overnight, you can't correct it overnight. So it does take a period of time in order for us to get to where you need to be. That's why the $500 starter loan at Bankable is so important, because just having a loan on file showing that you paid it on time will do a tremendous amount to help improve your credit. But definitely take advantage of credit counselors if your financial institution has it. Please, if not, come to TCU and we'd be more than happy to assist.
Yeah, and so a couple questions here coming in for you, Alora. One, what type of real estate is covered? Does Bankable lend on?
Yep. So it's real estate that's for your business, and your business is occupying 51% of that square footage.
And specifically, I think maybe we got the answer because it's mentioned with Barbara, and Barbara, you do real estate. So it can't be for flipping. So they can't use it to buy a home that you plan to sell for profit. And I also don't know, Alora, if you would do it if they're planning to keep it and hold it as a rental.
No, can't do that.
Yeah. And so for that, Barbara, that's where we would use. And once again, this is why it's great. If we connect with me, there are 2 other CDFIs that I'm working with in the community who do lend. None of them will lend for house flipping. So no one does that because that's a for-profit endeavor that without community impact. But if you're looking to purchase a home to turn it into an affordable housing rental, we do have CDFIs that have done either lines of credit to purchase and renovate or be able to do long-term lending on those. The other one was, Laura, maybe more details on, so with the credit builder, did Laura say that came with credit repair assistance, like how to build business credit counseling as a question?
Yep. So you'll get connected to our credit counselor that's on staff with us. And just like Ann was saying, they'll kind of look at your specific situation and be able to kind of come up, either kind of help explain what's going on or, look at some specific strategies. One distinction I will make is that this is all for personal credit. So we do not actually look at or really help build business credit at all. So that is just for personal.
But that being said, what you should know is that when you're going for a business loan, your banker is going to ask for personal guarantee, which means if the business goes under, that you're still personally guaranteeing the repayment of it. And that's why your personal credit is so important. That's why bankers take a look at your personal credit and consider that when making a business loan.
So other questions here. And so the other one I would say, almost every bank or credit union in town has some type of credit builder program that they operate. So I always, when meeting with a client, the first thing I ask is who do you bank with? So whether that's Teachers Credit Union or a local bank, they almost all have some type of program that they help, whether that's some counseling or referrals or an app. Some even go as to more to having also some micro lending they do. We also have some micro lending that we do with some other CDFIs. So there's several different options, and I always really encourage that programming to help start fixing credit in advance, to help set you up to be in a good place. So Ivan, I'll answer your question because I do have a CDFI that lends that. I think Bankable doesn't. So when you say social enterprises or hybrid entities, you mean like whether that's a nonprofit or some other like different like corporation status. So Laura, if you want to answer maybe types of corporation status, I know you don't lend to nonprofits, but Ivan, there are CDFIs that lend either exclusively to nonprofits or to do more lending with nonprofits. And I don't know if Laura wanted to add anything to that. If not, I'll jump in and cover Rafael, your question about commercial property. And so yes, what they will do, and Bankable, I'll let you answer that more, and I can talk about other options. So if it's a commercial property, and I think maybe what Alora means to be more clear, on what business occupied means. Like you can't purchase it to turn it into a rental. It means you're going to buy a building and you're going to have your office there. You're going to do storage there. You're going to run a store out of the building. And you have to do that for at least 51% of the building. So a majority of the building has to be occupied by your business. So let's say you're buying a building, has like 2 storefronts. Your storefront needs to be the biggest in the building. And then you could rent out the other one as income. But that is what the business loan would be for, is for you to get a building. And some of those are similar. There's SBA criteria I could send that helps kind of break down what that looks like and how that works. But there are some business lenders that will do the same. And then I do know Bankable can supply working capital. I do like to say, I like to kind of warn people, I guess, that working capital tends to be the hardest thing to lend on because it's completely unsecured generally. And so it depends what the working capital is. Generally, it's easier to find. And so this is the advice I give the small business owners. It's easier to try to finance equipment than it is to finance working capital, like payroll or being able to cover contracts or materials and supplies. So I always warn business owners, don't go buy that truck and then try to get a loan to buy drywall. Go buy the drywall and all your materials, get a loan to buy the truck. Right. So thinking, and that's also when we talk about business structure, that's thinking about what you're paying for and how, because then also, right, the loan on that equipment, there's tax benefits to doing some of that versus not tax benefits to other things that you're purchasing. So that's part of like the coaching that we try to connect small businesses to say, well, don't buy that like this, buy it like that. Don't pay cash for that, finance this, but pay cash for that. Which is also other advice. This is the different webinar probably, is that once your business is to a point where it's definitely your primary income and it's growing, one of the top people you should have involved in your business is somebody who knows tax accounting, because they can save you tens of thousands of dollars per year in taxes you don't have to give the government because you just structured your business correctly throughout the year. It can save I've seen so many businesses that at tax time are like, now I've got to pay $40,000 just because I didn't know how to do this last year. And generally it's like, well, because I didn't want to pay an accountant $2,000 to do this for me last year. So thinking about those expenses, I know no one wants to pay other people outside your business, but you also don't want to pay more than you have to in taxes or other issues. So that's a longer answer to your question. And I don't know, Laura, if you had anything to add, but.
Nope, I think you covered that.
So Ivan, I'm going to hit back on your response, and that is regarding hybrid business. That meant both profit and nonprofits, where the profits fund the nonprofit mission. Bankable cannot do that. If you are a nonprofit, you are out of the bankable realm unless that is a daycare. So Sam does have some other opportunities that he might be able to talk to you about, but Bankable would not be able to do that. Jason Thompson has a question, Laura. With the credit builder, if you have partners, can they apply for the loan as well so that both their credit gets repaired?
Yep, can both apply.
I see Consuelo doing some networking here. We have a tax professional on our webinar today that might be able to help with some of the structuring. This is also why I love some of those. One of the biggest benefits for those of you who have participated in some of the local small business programming is, because I talk to a lot of businesses, they're like, oh, but I don't need help with my small business. I don't want to sign up for this program. But part of the support is just meeting the other people who are in that room. Right. So and I do joke because Consuela is one that you might get my joke, but I also tell most people, most of us got into, and I run 2 small businesses myself. None of us got into small business because we love accounting and finance, right? We got into small business because we love doing a certain type of consulting or working on cars or whatever it is you do, right? And then you realize that how you do your accounting and your taxes has a huge impact on your profit at the end of the year. And so really thinking about that. So Consuela's accounting service is on our call today. So I'll give you that shout out for you, Consuela.
Well, and Charles Kennedy also made the comment about that Sammy made a great comment about utilizing professionals. I do understand that if you have a startup and if you're new to the business world, that is a very daunting task. I've been in banking almost 40 years. I do not want to talk to my accountant or an accountant or an attorney for that matter. That being said, there are a lot of programs that are out there, and Sam had a great page that was up regarding local resources. There are additional resources throughout the state of Indiana, and you don't really need to spend a lot of money in order to get those resources. So there are people who volunteer their time and expertise, or even like through Spark, or Hustle, which Hustle is one of my favorite groups in South Bend, basically where you can take your side hustle and make it your full-time job. But people volunteer their time there, and you will be able to get connected and they can answer those questions. Putting in that kind of time to get the professional support is so important as you start up your business, because you'll know the path you need to be on. You'll be much more confident. And that has to do a lot with selling your business too, is the overall confidence.
Yeah, so I went back to that slide to put them up, and Charles, to kind of help highlight your kind of comment as well. I use this when I work with small businesses. When we do one-on-one meetings, I actually use the analogy of a chair. Like a chair has 4 legs, and you have to build your small business and build all 4 legs at the same time. Most of us that got involved in small business did it because we're a hustler and we realized we could make money doing something we're good at. And generally, a lot of us are good at doing or making something. Consuelo's good at accounting and finance. But as you build that stool, no matter how good you are at selling something or doing something, if you're not managing the other legs of that stool, you can never get it as big as you'd like it to be. So you've got to build the weakest legs. I use a lot of sports analogies, right? So most people say you always practice the most of the things you're not good at in sports, so that way you're well-rounded. And so it's the same thing here for your small business. You need to be well-rounded in order to grow, because if your administration and the back end of your business is not as strong as it needs to be, no matter how good you are at sales or how great your product is, you're just not going to be able to help grow it as well as it could. And that's where all these great organizations are great partners. So with that, unless there's a last question, we've only got a few minutes left. I'll kind of start our little wrap up here. And I want to thank, I'll go back to this slide. So I want to thank Ann and Lindsay, who's here with us from TCU. I want to thank you for your support, sponsorship. Congratulate Ann again on the award last week and for all your hard work and impact that you've made in our community, personally and through TCU. I want to thank Alora from Bankable. She did the lion's share of the work today, and so we want to thank you, and please check them out for whether that's the Indiana Black-owned Business Loan Fund or other loan programs that they have. Please check them out, and we will send a follow-up email. So to that, just reply if you've got additional questions, and I'll help matchmake you to the best place possible to get your questions answered. So thank you again to our panelists. Thank you to everybody for joining us today. Enjoy the rest of your Monday, and don't forget your umbrella. Thank you very much. Have a great day.